Hello everyone and welcome to Insurance Business TV and welcome to the Q4 edition of our Cyber Insurance Power Panel. Yes, throughout the year our editorial panel has been offering their insights on the state of the market, the biggest risks and the opportunities for brokers. And now the band is back together again one last time in 2025 to bring us right up to date. So let's welcome them back. We have Ethan Gotlieb. He is Associate Partner, Cyber Tech and FinTech at Consilium Insurance Brokers. And Daniel Winn. He is a broker at Capsule Insurance. So welcome both. And with the UK cyber insurance market currently experiencing softening rates and increased capacity, I'd like to know, how are you maintaining underwriting discipline and ensuring that broader terms do not compromise risk management in the face of course, what is a rapidly evolving threat environment, particularly, of course, driven by AI? Daniel, let's get your thoughts.
So softening rates has actually allowed us to focus on non-buyers in this sector at the moment. Lower pricing coming in with increased coverage for clients. It's been a perfect time for them to look at buying the cover. Also allowing us to upsell higher limits to clients where they may have previously bought a lower limit or they have some lower inner limits such as business interruption. Allows us to look at these areas and get them increased coverage along with their exposure at a more competitive price.
Yeah, it sounds like, Ethan, that underwriting discipline is going to be crucial here.
Yeah, I think so. Look, increased capacity and competitive pricing for clients is always welcome, of course. However, underwriting discipline remains critical, particularly, I think, for sustainability in the market. We don't want a repeat of 2020, 2021 with huge spikes in pricing. I mean, the nature of the cyber market makes it volatile, but nobody likes shocks. I think there's always two aspects to the premium. There's a kind of a technical price and there's a commercial price. And whilst I don't think anyone is bound at the true technical price, at least not in the mid-market for a while anyway, there must still be some rationale and sensibility to pricing to avoid what I think would be a very underpriced market. And when I say underwriting discipline is critical, I think this means an expectation for the clients to maintain robust minimum security standards, things like multi-factor authentication, tested incident response plans, and managing people risk, amongst others. Supply chain risk particularly remains a key and growing threat. So I think scrutiny on controls, around controls on privileged access management and vendor and supply chain risk are important too. And at Consilium, we always make sure that clients are aware of the extra risk management services that come along with most policies now, particularly from the insurtechs, and can take advantage of those, whether that be onboarding calls with risk engineers, crisis simulation workshops, or even micro penetration testing, to name a few things.
I mentioned AI a little bit earlier, Ethan, as well, and we have seen some claims data showing a surge in AI-enabled social engineering attacks. So what steps are you taking to help your clients, especially those in sectors with legacy systems, perhaps, to strengthen their defenses and their incident response plans?
Yeah, again, I think education is key here. Many of our clients now have an MSP, a managed security provider, or a CISO or a CTO looking after their cyber risk. I think maturity's definitely got better over the last few years, but I think it's important that clients have a view from the insurance side of things as well to make sure that they can get the best coverage and premium. Specific to AI social engineering attacks, these are becoming increasingly more difficult to identify. There was a study conducted recently across 2,000 people across the US and the UK, and only 0.1%, that's 2 people, could consistently and accurately distinguish between real and fake content. There's going to be 8 million deepfakes shared by the end of the year. So I think we'd all like to think that we'd know and be able to spot, but the odds are definitely stacked against us. I think phishing and other staff training, therefore, is basically non-negotiable to try and help spot these increasingly sophisticated attempts, and should be done at regular intervals throughout the year. We also encourage clients to stress test their incident response plans through things like tabletop exercises to ensure they can contain and recover as best as possible, ideally with a handy cyber insurance policy in place to help. And we're also partnering and working with insurers and also risk management providers to bundle risk services like phishing simulations and tabletop workshops into the policies themselves. That makes resilience and support available even for the kind of more resource constrained organizations.
Yeah, we'd like to assure everybody that this is real content. If I was a robot, they'd have picked a much better looking one, I'm sure. But Daniel, I'll flip it over to you. I mean, to Ethan's point, this really is all about training, isn't it?
Yeah, exactly. I think the figure out there is about 80% of cyber incidents are a result of human error. So the more training and the more awareness people can have, the more geared up we are to spot these sort of deep fakes or the phishing emails. Most insurers now will give additional cyber controls or training as part of their policies, whether that's phishing simulations or just a general cyber awareness training online for people to use. But I think the importance is getting people to use those tools that are out there, because they are there to help them. As much as we have an insurance policy at the end of the day, in the event of a claim, I think if the more we can prevent a claim, the less damage to the business there is long term anyway.
If I can just change pace a little bit with you, Daniel, as well. Of course, there's been a launch of a lot of new cyber insurance solutions tailored for SMEs in the UK recently. So what are you seeing as the main challenges in closing the preparedness gap for those smaller businesses? And indeed, how can brokers and insurers as well better support those clients in developing that sort of robust cyber resilience that they need?
Well, most insurers now, especially in the SME space, are giving sort of additional cybersecurity tools as well as the policy itself. It mainly came from the insurtechs, bringing this over from their MGA stamps and their additional risk management offerings. And I think your general insurers are catching up with their offerings as well. But they're giving things such as scanning vulnerability tools, which helps the client see their exposure, see the real-time threats as they come in, and allows them to jump on and fix those issues before it becomes an even further of a threat. Like I said, free cyber training and phishing simulation tools are out there. They can have free calls with their cybersecurity team to run through what they've got in place, what they may look to get in place, and if it is actually beneficial as well. Some insurers and they'll give a scoring on sort of the cost effectiveness of paying for a certain cybersecurity tool and what the benefit with that would be if they had a claim, and how that would look at reducing their claim long term by having those tools in place.
Plus, we always used to hear, Ethan, that a lot of smaller businesses had the attitude of, well, it won't happen to me. Is that still something that we see nowadays?
Unfortunately so. I think, I see a lot of SMEs underestimating their exposure, assuming that cyber risk is a big business problem. But the number one thing I hear when a client has a cyber attack or an incident is, I wish we'd thought about this sooner. And the thing to take away, I think, is if you're vulnerable, you're valuable. So it doesn't really matter what size you are. If you do hold data or store email or process payments, you're a target. 96% of cyber attacks target the SME and the mid-market space, according to CFC. And obviously more than 4 in 10 businesses in the UK have had a cyber attack last year. That could be your business. I think most clients wouldn't dream of not insuring their property and casualty risk. But even though cyber is the number one risk for most businesses, as rated by Allianz for the last 4 years, it remains very underinsured across the market, with penetration usually at around 10% or less across the book. I think the challenge lies in simplifying the process for clients and helping them see the value in the policy and how it actually saves them cost when they have a cyber incident. It's kind of a when not if situation, sadly. But from a controls point of view, I think many SMEs kind of lack dedicated IT teams, particularly in the micro, maybe sub 10 million revenue sector. So I think, as I say, simplifying that process with clear guidance on baseline or baseline controls, or the kind of threshold for insurance, if you like, would be really helpful. At the moment, the market is very soft, which is great for new buyers. As Dan said earlier, many insurers are now able to indicate, if not quote, based on very little information, which also helps the process without the need for kind of lots of arduous proposal forms. As brokers, I think we can help play a proactive role in embedding risk management tools within the policies and offer consultative support as well, as both Daniel and I have already said. And finally, I'd just say education campaigns tailored for SMEs, like the ones we're doing at Consilium, and highlighting the kind of real world claim examples are essential and very useful to help kind of shift the mindset from insurance as a cost to insurance as a resilience enabler.
Yeah, excellent thoughts. But if we can sort of ramp up the scale a little bit, Ethan, another thing that might not be an if, but rather a when situation is that threat of a cyber catastrophe event. It certainly seems to be becoming more prominent. So do you believe that the UK market is adequately prepared for a large-scale multi-sector incident, or is there a need for a government intervention or some sort of backstop?
I think it's an interesting question. There's been lots of debate on this over the last few years. I definitely recommend a read of James Burns at CFC's article on systemic risk, which raises some good points from an underwriting and modeling and actuarial point of view. But I think systemic risk, just to be clear, is an event that would ultimately trigger thousands of policies that could systematically flip the market or exceed the private sector's ability to deal with it. That kind of event could be from a cloud outage. So you think of the recent AWS outage or CrowdStrike from last year. You could think of a major software vulnerability or a coordinated ransomware campaign. So we mentioned AWS. We also had CrowdStrike last year in July of 2024. Good example of things going completely wrong. Faulty configuration update affecting 8.5 million Windows devices. So that had severe disruption, whether it be affecting airlines or banks or hospitals or government services. Although the event didn't really continue long enough to exceed most waiting periods, that could have been a systemic event. A couple of years ago, some of the leading insurers like Beazley and Chubb wrote clauses into their insurance policies to help cap or limit their exposure if that kind of event were to happen. Now, my personal view is that there is actually so much capacity in the market. Munich Re estimates that global cyber insurance premiums are around 14 billion now. But the market's actual risk-bearing capacity is probably significantly higher because of reinsurance layers, capital reserves, etc. So to flip the market or force this government intervention we're talking about, a systemic cyber event would need to be on an unprecedented scale. I mean, never say never. We never do in cyber. But as a global cloud outage or critical infrastructure failure could surpass private market capacity, it seems that to me that the cyber insurance market is pretty well capitalized enough to withstand quite with extreme events. Whether the government should intervene or not, I think is a different matter. Though we've seen them do so lately in the private sector to help bail out and support Jaguar Land Rover. I think they've offered a commercial loan estimated to be worth up to 1.5 billion. So there's an example of the government stepping in. And just finally on this, there are a couple of other points. Parametric offerings also exist to cater for systemic events. So those are policies where if an event happens, then there is an immediate claims payout without the need for arbitration or any sort of kind of claims process. It is simply, if this happens, then this payout will be issued. Though those are typically geared towards much larger corporate clients and are more costly owing to their nature. But yeah, a government-backed backstop like Paul Re for terrorism, for example, might become necessary to maintain confidence and stability in the market. But I think if that does happen, there would need to be some very good collaboration between insurers, brokers, and regulators to kind of define triggers and frameworks before that event happens, rather than reacting after the fact.
There's some reassuring words overall then down from Ethan there, but there have still been some near misses recently, haven't there?
That's right. As Ethan mentioned on the CrowdStrike and AWS, they were areas that could potentially have been triggered by an insurance policy. And I think we were lucky to see that, and it does show the readiness of these companies to be able to fix and rectify these issues very quickly. I think obviously the issues were found initially in Australia, and as the US woke up, it was basically fixed by then. So across the globe and the different time zones, we're able to get it fixed very quickly. But it does show how easy it is for something to go wrong and how it will affect so many people at once. And like I say, do we need something similar to the flood or EWS fire safety government-backed schemes out there? And I think it's difficult to say on that one. And I think we would need to see a catastrophic loss to happen first, and for insurers not to respond as we would want them to do. And as Ethan said, we'd have to work with local bodies and insurers to get something in place for that. But I think that's something that's a long way off. And like I say, something would have to have happened in the first place for that to happen.
So one last question to throw at you both, if you don't mind. Just tell me, Daniel, I'll start with you. How are recent advances in analytics, AI, and indeed real-time threat intelligence shaping your approach to underwriting, pricing, and customization of cyber insurance policies for UK clients?
I think the real-time threat intelligence has been great for brokers, insurers, and clients alike. It allows us all to see the issues that clients are facing, what vulnerabilities they've got. Previously, we would send a risk out to an insurer, we would get a quote back, or they would say, we need to have this in place before we can quote. Now we can run a quote through, we'll get a risk report back from an insurer. It'll tell us where the client is vulnerable, what needs to be fixed to enable to be it'd be quoted. But it allows us to see that, and we can speak to clients who are potentially non-buyers of cyber insurance. It opens their eyes up. If they can see in black and white they're vulnerable, it sort of opens it a little bit more. They see on the news, obviously, Jaguar Land Rover, Co-op, M&S, these people are having attacks, and they think we're not big enough to be attacked. The unfortunate news is they're not big enough to be attacked. They're just not big enough to be in the news. It is a phrase I heard recently on this. And it allows insurers to see a lot more, any changes throughout the year, any changes that they're having. Some insurers can now embed into the client's Microsoft 365 system. They can see if they're turning off MFA, and allow them to notify. They might have one employee that's turned it off, so they can notify their IT team and fix an issue before it happens. From there, it allows insurers to see on claims data what parts of policies are being triggered, any trends that they're seeing. Obviously, from threat actor groups as well. If there's multiple of these, if they're seeing trends in who they're attacking, what they're doing, and how they're getting in. So I think it's been great for everyone, really, the use of AI and the tools that are involved.
Would you say overall then, Ethan, that this is having a transformative effect on underwriting?
Yeah, I think so. Like, obviously, I'm a broker, so I'll leave the underwriting question to underwriters for the most part. But I think Dan's spot on, really. What I would say is that AI and that kind of advances in analytics is a bit of a double-edged sword. It's what I'd call a cat and mouse game. You've got the kind of threat actors using it for much more sophisticated attacks like deepfakes and other social engineering techniques. And on the other side, you've got the good guys equally using it to kind of help through sift lots of information and identify threats and trends and help defend clients. So yes, absolutely. The analytics and the AI being pushed as far forward is definitely transforming underwriting from a more static process to a dynamic one. Those tools that ingest real-time threat intelligence that Dan's talking about, those enable the underwriter to adjust the pricing and the terms based on the current risk signals rather than simply the historical data alone. So clients actually get a much more bespoke pricing, which is actually better in most cases. And for us brokers, that means we can deliver more customized solutions and we can align coverage with the client's actual risk posture rather than just putting them into the same bucket as some other clients. That predictive modeling also helps to identify emerging vulnerabilities, so we can advise clients more proactively as well before a loss happens, which, as Dan said earlier, is crucial. And ultimately, these technologies are driving a shift towards what we call active risk monitoring or continuous underwriting, where resilience and transparency are just as important as the premium. Less kind of write it and forget it just at the renewal date, but rather a kind of active risk approach, helping clients to mature the security throughout the policy period using the risk management tools and the threat intel and the AI tools that are being either provided for free within policy or heavily discounted. It's a win-win for insurers, I think, because clients and the insureds become better controlled. Clients hopefully see the value in the services being provided to them by insurers, and hopefully that makes the business more sticky as and when the risk is remarketed. That's what I would say.
Great thoughts, and a huge thanks to you both for your contributions, not just today, but throughout 2025. And thanks, of course, to Salome and Adam, who couldn't join us this time around as well. Our panel will be back together again in the new year, but until then, have a wonderful festive season, and we'll see you next time right here at Insurance Business TV.